All right, today we're going to add a very specific, and I mean really powerful tool to your financial professional toolkit. We're talking about MassMutual's Radius Transition Select. Now, this is built to solve a crucial problem that, let's be honest, more and more of your clients are facing as they decide to work past age 65. So just think about your book of business for a second. You've got a client, right? Maybe a successful business owner, a consultant. They're 67, they absolutely love what they do, they're still at the top of their game, and they have zero plans to slow down. But what happens if they get sick or injured? How is their single most valuable asset, their ability to earn an income, actually protected? And that exact scenario, that's what creates what we call the post-65 protection gap. It's that really tricky, kind of vulnerable period where a client's traditional disability insurance has ended, but their career hasn't. It's a risk that can totally sneak up on even the most prepared clients. And look, this isn't some rare niche issue anymore. We're seeing people working well into their late 60s, even their 70s, and their income is just as essential as it ever was. The big problem is that the policies they've been relying on for decades, well, they often just terminate. Poof, right at age 65. That leaves them completely exposed. So how do you solve for this? Well, this is exactly where Radius Transition Select comes into play. Think of it less as a replacement for a traditional DI policy and more like a specialized bridge. It's specifically designed to span that gap between age 65 and whenever the client's actual retirement date is, giving them a really crucial safety net. So there are really two main ways you can put this product to work. First, you can write brand new coverage for clients who are between 65 and 70. Or second, it serves as the official conversion path for your existing clients whose older Radius policies, the ones from 98 and 01, are about to expire. Knowing the ideal client for this is absolutely critical. The eligibility requirements are super specific, so let's just walk through the hard and fast rules right now. First up, age. It's non-negotiable. The client has to be between the ages of 65 and 70. This isn't a product for someone in their early 60s. It is exclusively for this very specific late career window. Next, they've got to be actively working, and the requirement is a minimum of 30 hours per week. This makes sure the policy is protecting a significant, ongoing income stream, not just some hobby income for a person who's semi-retired. And this is a huge one for compliance, so listen up. You have to be aware of state availability. Radius Transition Select is currently not available in Florida, Minnesota, New Jersey, and New York. So you've got to keep that top of mind when you're thinking about who this might be a fit for. All right, now for the real core of the product. Understanding exactly what this policy covers, and maybe more importantly what it doesn't cover, is just essential for setting the right expectations with your client. So the policy pays a benefit only for total disability. The definition here is everything. The insured must be unable to perform the main duties of their specific occupation, they can't be working anywhere else, and they have to be under a doctor's care. It's a very clear, straightforward definition. Just look at how focused this policy is. It is designed to do one thing, and one thing only: cover total disability. Now that means, and this is huge, it does not cover partial disability. Any riders from a previous policy, like a cost of living adjustment, they're gone. And there are no rehabilitation or return to work benefits. This is a very streamlined benefit for a catastrophic event. Okay, let's switch gears and talk about the mechanics of actually keeping the policy in force and how the premiums work. This is the financial fine print that every single client needs to understand from day one. So this is what's known as a conditionally renewable policy. What does that mean? It means that each year, two conditions have to be met for it to renew. One, the client has to still be working at least 30 hours a week. And two, they cannot be disabled or receiving disability benefits from any other source. Think of it like an annual check-in. Now, when it comes to the premiums, there are three key facts you have to communicate. First, they are designed to increase every single year on the policy anniversary. Second, multi-life discounts are available, which is awesome for your business owner clients. And third, and this is the most important one, the premiums are not guaranteed. This is so important. Unlike those non-cancelable policies your clients are probably used to, the underlying rates for this policy can actually be changed by the carrier. This is a fundamental difference and a critical piece of information for any client considering this coverage. And, as the source material makes perfectly clear, all this info is for you, the financial professional. It's your job to take these details, understand them inside and out, and then translate them into a clear, responsible conversation with your client about how this product fits into their overall financial plan. So, as we wrap up this explainer, the real question I want to leave you with is this. As you think about the clients you serve who are still working past 65, which one of them is standing on one side of this protection gap right now? Which client in your book needs this exact bridge to get them safely to their real retirement?